It's The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I am joined by Paul Wiseman, president of Guildhall Wealth. And everything at Guildhall is physical. We deal in physical gold, physical silver, natural fancy colored diamonds. We have a motto: if you can't hold it, you don't own it. And that includes direct delivery of physical product, whether you want to store it in our vault, which is an independent vault facility held outside the banking system. And then we also have registered accounts where clients can physically own their gold and silver, have it allocated, segregated, have direct ownership of that product. It's an absolutely fabulous vehicle. We'll get into that a little later. Paul, how are you doing?
I'm doing great, except for the COVID increasing. Makes me a little nervous, being over 70. But again, if people pay attention, wear a mask, sanitize, wash their hands, stay the distance, we will all be safe. But this is affecting gold and silver. We're already getting, I spoke to New York yesterday, we're getting deliveries from Switzerland are going to start being held up because of the virus. I believe you're going to see that some of the refineries close down. This is going to start bringing a shortfall again. And you're going to see the spreads rise. Last week, silver and gold took a little bit of a hit because they came out and said, we've got a vaccine and it's going to be great. But that's not going to be distributed properly till the middle of June, probably.
Yeah, in fact, the price of silver started the week out at about $25. We're currently trading today on Friday around $24.27. So we'll call that 75 cents down. Gold was started the week off at about $18.95, and we're down to about $18.72. So it's definitely within a range. Reminder to our audience: gold is currently up 22.5% US dollars this year. Silver is currently up 34.1% US dollars for the year.
Well, I had a lot of customers actually buy silver because we dropped down as low as spot price. I'm not talking about physical, but spot price was at $23.60. Gold touched $18.51, $18.52, and this was a terrific buying opportunity because we know, you buy. What is it? You buy on the news and sell on the rumor, or the other way around. Gold and silver got affected. They're now coming out and they're going to do some stimulus in the States. They mentioned that this morning or yesterday. And that's, as we're taping this show on Friday, we believe gold and silver is going to take off. And, I was talking to customers that took advantage of this dip. And you should buy on the dips. Don't plonk everything in at one go. We recommend that you have between 15 to 20% of gold and silver in your portfolio, but you don't have to buy it all in one day. If you don't own it, you ladder it in. If you bought some in at $23.60 or $24 or $25, it doesn't matter. Gold is for your golden years, as Salenti always says.
Yeah, I definitely agree. I think that some people will sometimes approach the market and they'll be looking for to do everything all at once, which can feel uncomfortable as well. And there's always room to move into the market in stages and get your feet wet, get involved, and then you build up even a habit to making acquisitions on a regular basis, and it just makes it a lot easier. And it's always great to hold back some funds because pullbacks happen. You were talking about stimulus, Paul. We'll get back to that a little later in the show. But you mentioned the fact that the price came down a little bit and people were taking advantage. And it's funny because the SRS Rocco report and Steve St. Angelo, who we've had on our show here, mentioned that, he said this is one of the sectors in the economy that sees increased buying when the prices are low and also when the prices are high. And an article he just put out, I'd love to get your feedback on this. This came out yesterday. The title of the article was "Silver Market Getting Primed for Another Massive Buying Wave as Silver Eagle Sales Surge Higher in November." He starts the article by saying the silver market is just one step away from another massive buying wave and is just waiting for the next leg to drop in the global economy and financial system to do so. With silver investment demand to account for nearly 75% of global mine supply this year, if we experience the same type of demand next year, we will enter a silver market like never before. He goes on to talk about the current sales in the market, that Silver Eagle sales so far in November at 1.4 million versus 463,000 for the entire month last year, so November last year. And for gold, they've sold 769,000 for the year, compared to 152,000 ounces for the full year of 2019.
Those are gold eagles.
Those are gold eagles. So you can see the incredible physical demand on this market, even just looking at the reports for November alone.
Well, everybody's looking for yield. I mean, you put money in the bank, you're not going to get any interest. A GIC, you're not going to get too much interest. Gold doesn't give you any interest, but it gives you the security that it holds its wealth. It holds what it's worth. For 5,000 years, gold and silver has been real money, and it's still real money today. We have to look at where we are in the markets. When the stock market goes up, gold and silver sometimes goes with it, sometimes it doesn't go with it. I mean, Bitcoin has gone through the roof in the last month and a half. We've gone almost from $10,000 to $18,000 and change. People are just chasing yield. Where can they get some type of return?
Right.
And
versus
this is real estate. If there's, you've got a low interest rate for lending, borrowing. So people go to real estate. People go to where they, it's like going to a casino right now. Do you buy Bitcoin or do you buy a stock? Do you buy a stock that gives a yield, but the stock drops? Gold and silver has always been that safe haven. It will be always a safe haven. It has its ups and downs, but over the last 15 years, I think gold is up 10% on average.
Yeah, exactly. I think, when you said Bitcoin's doing great, it is. Stock market's doing great as well. Interestingly enough, I'm always talking to people who seem to not be doing so well in their portfolios that are being managed. They're wondering where their yield is, and at this point, with the current market as it is, they're not just necessarily looking for yield sometimes, but it is about preserving capital and preserving purchasing power. And as we know, and you just mentioned, Paul, if you're looking at an average of 11% a year on gold for the last 15, 20 years, that's a good place to be preserving wealth.
Yeah, absolutely. I mean, you're not getting that return at the bank. The bank stock TD, as an example, the stock went up, I think, like $8 in the last week and change. From $60 to $68. They're making money. They obviously do. So do all the other banks. Some people love to own bank stocks. They get a dividend, and it's safe. But it's probably better than putting your money in a GIC.
Yeah, I think ultimately the idea of precious metals, again, as a wealth preserver, is that it's not an investment. That it has no counterparty risk. It has an innate value that has been so for thousands of years. It's been a store of value. And so when you look at the volatility around, you can say, yeah, the bank stocks are up, but they could come down just as easily, right? Dividends can be seductive. Yes, I want those dividends, but you don't know where things are at. Interestingly enough, by the way, phone number 1-877-8-SILVER, the website guildhallwealth.com. Paul, you mentioned real estate.
Yeah, I just want to get back to the banks.
Yeah.
The reason that some of the stocks went up, especially in the States, JP Morgan as well, the reserve for delinquencies. They haven't had that much delinquency as of yet. They've got a reserve put aside, and it hasn't been as bad as they thought it was going to be. But we've got another wave of COVID coming. So,
yeah, I've got a couple of. I think that leads into a couple other articles that I have. One from betterdwelling.com, and it's talking about the fact that there's still 300,000 just under 300,000 mortgages still on deferral, right? So while some have started to make their payments again, there's still a lot out there where they haven't been able to start making payments again. And you were talking about real estate, and another article from Better Dwelling came out, which was very interesting, talking about the fact that the Bank of Canada ended its mortgage program back in October, which is they buy the mortgage-backed securities through, and then they create the bonds. They buy the bonds, which covers the cost for the mortgage-backed securities. And what that ends up doing is it actually pushes the rate lower. And so what the Canadian government was doing up until October was trying to push the interest rate down by buying these mortgage-backed securities and the bonds. And of course, they've continued to do that, not in the sense of trying to push the rates down, but trying to keep them low, which, as we go to break, just give this some consideration, the idea that low interest rates are not an indication of a healthy economy.
Yeah, but the low interest rates are not going to stay around forever either. I mean, eventually the rates will go up, and that's when, the crap will hit the wall.
Right.
I mean, it really will.
The number 18778-SILVER, the website guildhallwealth.com. And if you're looking to acquire some physical precious metals, you can go to our website, go to guildhallpreciousmetals.com, and you'll see right now, which is actually typical for the industry, Paul, that there's a limited amount of product.
Well, yeah, there's a limited amount of product, but I believe in bulk purchasing and buying the best product and keeping product in stock. I mean, to have 45 SKUs or 50 SKUs of gold, whether it's all different types of brands and coins, silver with different things, Superman, maples and all that stuff, it's such a small part of owning bullion. In bullion, you want to own 1 ounce gold bars. You want to own 1 ounce gold maples. You want to own maybe 5 or 10 ounce gold bars, even a kilo bars of gold. In silver, you want to own 1 ounce silver maples, 10 ounce silver bars, 100 ounce silver bars. That's all you need to have. So who needs to have 32 different brands? It's like going into a bar and you see, 12 different types of single malt and 8 times of rye and all different tequilas, and then somebody in your restaurant all of a sudden wants a Tia Maria, but you've got to have it in stock. It doesn't move.
Right.
So we keep the product that we don't have to have product that's dead. We have a live product. If we don't have something, it gets taken down from the website, which makes sense. People are putting money in and not getting their product with certain companies out there.
Yeah, and I think that while some people would love to be able to go to a bar and see all of those different single malts that are available, the fact is it's true. I think the idea of limiting the selection to only LBMA approved product, which is London Bullion Market Association, meaning all of these products meet the same criteria quality. All of these mints can handle a certain amount of global business, and they're all sourcing their product ethically. And so what that means is you now have a product that is globally recognized and is the most liquid product in the world. And so we've done the work for you. You just have to pick one of these products. And sometimes even I noticed on gold, Paul, that sometimes, maybe you can explain to our listeners, why is it that Royal Canadian Mint is more expensive than a Swiss brand? They're the same product, both LBMA approved, both the same quality, but one is $10 per ounce more.
Yeah,
RCM.
sometimes, but in some cases, Swiss gold is even more expensive. Like PAMP is normally more expensive than Valcambi or Argor or even Royal Canadian Mint because it has a really pretty picture on the front, Fortuna. But we have to look at what people like. In Canada, people like Royal Canadian Mint.
Sure.
That's what they know. I mean, it's what they know.
Right.
In Europe, it's all Swiss gold. That's what people want. Maybe Turkish gold as well, IGR. But it's Swiss. So in the States, Royal Canadian Mint is not that popular. I mean, there's other mints in the States, other refineries, but some of them are not LBMA approved. You want to be able to have a product that you can sell anywhere in the world. And that's what we provide, whether it's a Royal Canadian Mint or whether it's a Swiss bar. Now, stay away. I mean, one of the problems is if you're buying from an institution or somewhere that has their product branded. Now, if it doesn't have the brand, it has the name of the institution, but it doesn't have the name of the product where it's manufactured. Is that product LBMA approved? When you want to go to sell it, is somebody easily going to take it if it doesn't say Valcambi on the back of it or Royal Canadian Mint? If it's, says some brand or it doesn't say any brand, you have to be a little nervous about when you want to go to sell it.
Yeah, you have to know if the product, what you're saying, Paul, is that anyone who comes to our site or anyone who comes to Guildhall knows they're getting LBMA approved product, which means they know that when it comes time to sell their product, they're going to be able to sell their product, no questions asked. But if you're buying somewhere else and you're not sure if you're getting LBMA approved product, number one, you have to ask.
Well,
number two, you really have to know if it's LBMA, and if it's not, you have to understand that it may come with a cheaper priced when you're buying it, but when it comes time to sell, you may have difficulty selling it. So is it worth getting a little bit less, like spending less now, but having to pay for it later?
Well, people have come to us we sell a lot of gold and silver, thousands and thousands of ounces of gold. Why don't you brand your own product, put Guildhall on it? Well, when you go to sell it, who's going to buy it? Guildhall's the only place that's going to buy it. You won't be able to take it somewhere. They're going to discount you for some reason. If you buy a bar and it says Royal Canadian Mint, or it says PAMP, or it says Valcambi, you're going to get your true value for that bar. Stay away from product that's branded.
Right. I know that I used to pick up some Scotiabank bars and it said Valcambi on it.
Yeah.
So it was pretty obvious. It's like, yeah, it's branded Scotiabank, but it's made by Valcambi, which makes those products as good as any other product.
How many bars from Scotia didn't have anything on it, and you didn't know whether it was LBMA approved?
Right. Equally, I've also noticed that over the years, like over the last 12 years, it used to be that you would buy gold out of the package. Now they're all in these sealed packages.
Yeah, Johnson Matthey, there was never any package sealed when you got those bars.
Right. But you don't want to open those packages now either.
No.
Because you don't.
Because it's got the assay on it. It's got the security that this is a real bar.
Right. And if they sell it without the package, then basically what's happening is you're selling it back to a wholesaler, and they can't sell it to anybody. So they have to end up selling it, maybe back to the mint, who's going to melt it down and put it back into a package.
Yeah. But the other thing is as well is if you've got product and you're storing and it's in our depository and you want to sell it, it's a phone call. We know the product. We know where it's come from. We know it's moved from one side of the vault to the other side of the vault. We know the integrity of the product is a circle. And that's why we like the depository. And it's the same thing with registered accounts, whether you want an RSP or a TFSA. And if you haven't owned a TFSA, this is a vehicle that you should be putting your gold and silver into. You can own almost up to $70,000 you can invest if you've never invested before. It's tax-free. So, for example, if you'd have bought gold at the beginning of the year for $1,700 or $1,600 and you wanted to sell it at $1,900 US, you would have made $300 an ounce, and you could have took your money out and tax-free.
I've noticed a lot of clients doing exactly that, where whether they've sold some property or they have cash in the bank, and they realize, well, I'm not getting any return. Gold makes sense. Why does it make sense? Well, governments are printing money like crazy. We can talk about that in the next segment. Interest rates are low. I'm not getting anything on my money. I can see the dollar is declining. I see inflation happening. Where can I put my money for a while? Even if it's 6 months, a year, right? They're looking at the potential of the market moving. Now, gold and silver physical are not trading vehicles. But what you're seeing is people who are saying, well, the cash would just be sitting there. And if the cash is just going to sit there doing nothing in the bank, and I do not want to buy property, and I do not want to go into the stock market, and I do not feel comfortable with this and that investment, then I'm going to put it into a TFSA and buy the physical.
Husband and wife, they've got almost $140,000 they can put in, and we've had several customers that have bought at the beginning of the year, and they've made very, very nice profit, and they've taken it out.
Exactly. Now, it has been a good year in the metals. Even if the market for the last couple months has kind of, consolidated a little bit, at the end of the day, both gold and silver have made nice moves up. They've come back down off their highs, but it's still great double-digit gains in the market. Now, one of the things we talked about, the fact that people are buying physical, right? We've seen that trend happen for a long time, but this year in particular, we've seen a lot of physical demand in the market, so much so that there's not a lot of availability. You look at all the dealers around town or wherever, you can see they don't have a lot of physical product. Now, Craig Hemke, who is very trusted in the business for following what's happening on the Commodities Exchange in New York, he just posted an article talking about the fact that the physical demand out of the COMEX this year has been absolutely astounding. One thing he notes here is that there is a potential next month which is the final month, December, a delivery month, that by year end, there could be 265,000 contracts, which is a whopping 825 metric tons of physical gold that has been taken off that exchange. And that's the equivalent to the gold holdings of Japan, which is at 762 metric tons, or the Netherlands at 612 tons. Like, you're talking about a country's full gold holdings that have been taken off that exchange by private investors, by wealth, sovereign wealth funds, you name it. The fact is he questions. He believes that even if there's a massive drawdown of physical product next month, which is very possible, that they will be able to handle it this time, but it does not bode well for the COMEX going forward, which obviously means much, much higher prices.
Well, we've been stocking up on gold and silver. While, the price is still, the spreads are still a little higher than normal, but we've been buying and stocking, especially when the price drops. I buy because I know customers are going to be calling and wanting product. So we make sure that we've got product. We basically have three inventories. We have a static inventory, we have an inventory going out, and we have to replace what we're selling. So there's three inventories that we have to keep moving.
Right.
And, through the whole pandemic, we've been able to fill every single order for every customer.
Yeah, and one of the things that we're very proud of here at Guildhall is the fact that we don't take orders and then deliver 3 months later. That's unacceptable to us. It's got to be, you have to be able to get that product very, very quickly. Well, if it's a very large order and we have a great relationship with the client and they understand us, and we say, look, it's a couple kilo bars, it could be a week and a half, 2 weeks, that's okay, right? Because you already have a very clear established client. But if it's a new client, no, we have this product available, right? Or we'll let you know once this product is in, etc.
Yeah, we're not selling vaporware.
No.
It's as simple as that. But again, the same thing when you buy a registered account, whether it's an RSP or a TFSA or a LIRA. We partner with Questrade on this. That product has to get into the depository, and it's the same depository that we use, the same vault. It has to get in there within 10 days. That's the law.
Yeah.
You can't do a registered account and promise somebody for 2 months down the road. You place an order for 1 ounce gold bars, that has to be put into that account. It's a must. It can't not be done.
And if you want to learn more about holding physical gold and silver in an IROC approved independent vault facility outside the banking system that you have direct ownership of, you can contact us at guildhallwealth.com. Get a package. There's a great video that shows you exactly how it all works, how the inventory works, etc., how the delivery works, or you can call us at 1-877-8-SILVER. Now, Paul, in the next segment, let's talk about stimulus. Let's talk about where the prices of metals could be going from here after a great year so far. There could be fireworks next month.
I'm strapped down in my seat because it's going to go up like a rocket ship.
Number 1-877-8-SILVER and the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. It's as simple as that. Whether it's ETF, certificate, gold-backed fund, pool account, if you can't get your hands on it physically, you probably don't own that product. And what we do at Guildhall is we only deal in absolute physical product that you can get your hands on. Now, if throughout the show we've been discussing the fact that we also deal in a very specific type of product, which is what's called LBMA approved, London Bullion Market Association approved. The other thing we've been talking about throughout the show today, Paul, is the fact that demand in the market has been extraordinary throughout the year in the physical market. Anyone can see that. We also see that in the fact that the premiums for the physical product are higher than they've ever been, which is an indication of short supply, high demand, and the paper price of gold and silver not reflecting the true value.
Well,
the question
that
is,
doesn't exist. I mean,
right?
You can't trade 100 times what you've got in stock, and then when you've got delivery, we're talking about the delivery month. They've got to scatter around to find some of that product that it's got to be delivered.
The amount of juggling, it's kind of reminds me of Richard Gere in Chicago when he's doing the tap dance.
Yeah.
That's what the COMEX is going to be doing all next year probably. But let's talk about why it's happening. And it's not just the pandemic. It's not just because people realized I want toilet paper and I want my physical gold. It's the stimulus. It's the amount of money that has gone into the system over the last 6 months. I read a stat recently that talked about the fact that the central banks have put in 20 times more money within a 3-month period this year than they did all through 2008 through 2011. I mean, that's extraordinary. Now, between 2008 and 2011, gold went up something like 150%. And gold right now is only up 25%. So where is this heading?
Well, I just think, we're trading, I'm giving you spot, but it's, 24.30 an ounce silver. Gold is 1872. The other metal that I really love to death is platinum. And if, people a little older out there will remember, platinum was priced higher than gold at one time.
Right.
And it always was. And now it's, basically trading half the price of gold.
It was also very popular during the Edwardian period for jewelry.
Yes, yeah.
They made everything out of platinum.
And catalytic converters later on.
Right.
But
that's something we should try to probably find out, like what industries platinum's used in. To be honest, I don't really follow that. I know for silver, it's absolutely extraordinary, whether it's and this kind of goes to the election side of things, which is, silver is used in anything digital, anything electronic. And if you want to talk about modern monetary theory and just the idea of, well, there's no rules, we'll just print money as much as we can, let's do the Green New Deal, let's all just create solar power things and wind power this. We're not going to look into it. We're just going to say that saves the world, let's do it. That technology needs an extraordinary amount of silver. So forget investment demand due to people looking to protect their wealth. The actual industry side of it is immense, and also in electric cars. There's something like 200 million electric cars already on the planet. That's only going to continue to increase and increase. And there's way more silver in an electric car than in a regular car. So where does this lead us? I mean, there's something like 500 million ounces coming out of the ground every year in silver.
That's all in missiles.
That's all being used in industry. Very little is available for the actual retail
But I was talking about rocket ships.
Yeah.
And I believe gold and silver is really going to take off. And again, I love platinum. Even though gold and silver came off this last week, platinum moved up $60. So did palladium move up and held in there pretty strong. It's a metal. Those two metals, mined either in Russia or South Africa. And South Africa always has a problem with mining.
You're talking about palladium?
Palladium and platinum. And I love platinum. But again, I'm looking at gold, I'm looking at silver, and I think silver is due to really take out the high. We went at as high as 29.60 this year, but I think that's going to get taken out pretty quickly. Gold is trading at 18.72 right now. I think it's going to 2,000 and plus.
Well, I mean, if you talk to or you listen to podcasts and follow some of the gurus in the gold and silver market, people have been in the business for 20 plus, 30 plus, 40 plus years in some cases. They're looking at the math on all of the stimulus versus the finite amount of physical gold and silver. And there are some calls for silver to go well into the triple digits. Like we're talking, I've seen numbers like $600, which that sounds absolutely ludicrous.
Yeah,
but once you hit 100,
is that the propeller heads with the aluminum on their head?
No. We're talking people like Egon von Greyerz out of Matterhorn Asset Management, now granted they're saying you don't want to know what the world looks like at that point, but the fact is it's stored your wealth. Now it sounds crazy, but the fact is once silver goes to $100, you're in a new range, and a lot of it is just belief, right? Can it go there? What's the demand on it? And think about pension funds.
Yeah,
pension funds haven't even touched precious metals. A smallest amount of pension funds saying, you know what, it's time to get into this market. The price goes through the roof.
I'm looking, and we're talking about silver going to ridiculous amounts. You look at Bitcoin. Bitcoin is in the $18,000 range right now. It's gone up like crazy. What is it? It's vaporware. It doesn't, does it exist? You can't cash it in your hands. You can't hold it.
No, I mean, they're different markets. I do think that one is wealth preservation, which is gold and silver. It has an innate value. It has a reason for being, which is the fact that gold and silver have an innate value. They've been around for thousands of years. That's a very strong record. Now, some people are looking to diversify their portfolio, and that's not our job. Our job is in the physical gold and silver market. And we strongly believe that everyone should have at least 15-20% of metals in their portfolio. What you do with the rest?
Yeah, but what I was getting at, if you look at Bitcoin, that's gone up to over $18,000 in a month or 6 weeks or whatever, it can happen the same way with gold and silver. Gold is trading at $1,900. It could easily jump up 40, 50, 60%. And silver, when we could be seeing moves of $3-4 a day.
Yeah.
Not 30 cents a day, $3-4 a day, because as it becomes scarce and as people want it and it's not around, you can get whatever.
I agree. I think you're right. I think one of the things when you look at Bitcoin is there's no cost to entry, basically, right? There's basically no cost. It is a trading vehicle. And by the way, we do accept it at Guildhall. So if you have done very, very well and you're looking to continue to build your wealth with hard assets, then you could certainly take some profits from Bitcoin along the way, not maybe now or later, and roll that into physical precious metals. We do have some clients that have done that consistently for several years now because they look at Bitcoin as a trading vehicle, a way to make money. Right? Everyone's looking for return, as you talked about, looking for yield, and they've been getting it in many different places. But ultimately, how do you build wealth? Well, I mean, if you look at Monopoly, it's about getting assets. Paul, we've been talking about physical market, obviously. We mentioned the usages of silver, for example, in things like solar power and wind power, battery power, and all sorts of other usages because it naturally absorbs bacteria, which I think is going to be even more useful going forward because that's something that people are more aware of these days, right? They're all washing their hands. And so I think in the future, you're going to see more of these things with silver coating, right? So that these surfaces are all clean. It's that kind of idea. But I know you wanted to talk about industrial usages for metals, and I just grabbed an article that was just talking about the fact that yes, in 2020 the demand for physical precious metals from an industrial standpoint has dropped, obviously because of COVID, and there's all sorts of shutdowns. But again, going forward, the demand for photovoltaic, like solar power, and other usages, one I just mentioned, like surfaces and things like that, are going to be immense. I mean, this pandemic could have only been great for that side of the metal.
Well, the other thing is while this pandemic is going on, people are staying at home. Some obviously stocks that are doing well, the Amazons of the world and the Zooms of the world, but everything changes. The vaccine will come along and will help people get back to normal. It won't happen in a month or 2 months or 6 months, but probably sometime in 2021 we may see some normalcy. I like the fact that gold and silver is a hard asset. I've always been a believer in hard assets, whether it's land, whether it's gold, silver, whether it's art, whether it's antiques, whether it's collectible stamps, whether it's collectible baseball cards. They're assets that go up in value that are not created again. You need to protect your hard-earned wealth, to own some gold and silver. I'm not saying load up 100%, but anywhere between 10 to 20%, you can ladder it in. The best way to buy it, if you don't have a TFSA, is to have a TFSA where you can put gold and silver. You can almost put $70,000. If yourself and your wife, that's $140,000 that you could put in to a TFSA. If you want to own gold and silver, you can take it home, but I don't recommend, taking gold and silver home and keeping it there. These are, desperate times that are coming up.
Yeah, I think there's a good point there to be made, Paul, which is the idea of self-storage has changed, right? A lot of people would self-store product in a safety deposit box. But when COVID happened, you couldn't
get into the bank.
You couldn't get into the banks. And they've still keeping everyone at home in many respects. So I think that changes the landscape for storage of physical product. Now, the vault that we use, which is an IROC-approved vault, Investment Industry Regulatory Organization of Canada, is also fully insured, underwritten by Lloyd's of London, and there's no obligation. Clients can have their product whenever they want. So it does become, and also the key aspect of it is the liquidity, being able to sell on a phone call. So yes, while you might want some product on hand because you just want to be able to see it and hold it and know exactly where it is, I think today people are looking at the market and reconsidering what it means to store product and the idea of self-storing it maybe in a vault where, well, if I do want to sell it, I got to go there, get it out, and then come to Guildhall or wherever I'm going to go to sell. And I just don't have the time for that, right? It's funny, during these times, people seem to have a lot less time, even though they're not socializing as much. But so I think that's what the vault offers: security, liquidity. These are the key components, and of course the fact that there's no obligation. You can take delivery anytime. It's your product.
But the storage cost, I mean, people sometimes shy away from it. It's actually 1/10% of the value of the metal. Silver has to go up about just over 30 cents a year to cover your costs of storage and insurance.
Right, and it's already gone from like 18 to 24. So
it's peanuts.
Yeah, and if you have a business, maybe you can write it off. Right? If you put it under a corporation, it's a cost. It's an expense.
It's an expense like anything else. It's like bank charges.
Right. So that's something to consider.
But I just feel that it's better to be 1 month early to buy gold and silver than 1 day late. If you miss the market, people say, well, I'll wait for it to come down in price. You're going to miss the market. This is the type to get in. Silver's trading just $24 and change. Gold is, $18.70. Those are the spot prices. Platinum again is in the $9.50 range at spot. This is a great time to be buying these precious metals.
And if you think about it, Paul, if we were to get another 11%, 10% gain in the market on gold between its current price now and a year from now, that would put gold at around $2,100 an ounce. So it's a great gain. That's looking at over $200 an ounce there. So I think that no matter what happens, and of course we did get over 25% so far this year, so we'll see what happens. Obviously, we think given the supply-demand fundamentals, given the amount of money that's being created, the debts, that's alarming. People should be worried about that. They should be looking for ways to secure their wealth for the future. And the best way that we can see how is to have some physical precious metals in your portfolio. So give us a call. We'd be more than happy to talk to you. You might talk to myself. You might talk to Paul, one of our associates here at Guildhall. The number, 1-877-8-SILVER, the website, guildhallwealth.com. Thank you for joining us today on The Real Money Show. We look forward to speaking to you next week on Global News Radio, 640 Toronto.